All right, thanks everyone. So I'm Martin Turen, CEO of FPX Nickel. We are a Vancouver-based company. We trade in Canada on the TSX Venture Exchange, and we're going to give you a bit of a virtual tour to our project here, which is located in British Columbia. This is a PEA stage nickel deposit. The project is called Dakar. The main deposit is called Baptiste. Baptiste is one of the largest undeveloped nickel deposits in the world. It models to be a producer in excess of 40,000 tons of nickel per annum, which would make it one of the largest mines for nickel in the world if it was in production today, on a resource base that would support that rate of mining for about 35 years, with projected C1 costs of around $6,500 US a ton, which would place it in the bottom third of the cost curve. The history of the project: this is still a relatively new project, still relatively early stage. This was a discovery our team made in 2008, and in 2009 we optioned the project to Cliffs Natural Resources, which at the time was about a 10 billion market cap company focused on iron ore but looking to get into other commodities. Cliffs spent about $22 million advancing the project, drilling off that very large deposit, and then they ran into a serious cash crunch and a near bankruptcy in 2014, and as such we were put in a position to be able to repurchase the asset from Cliffs for pennies on the dollar versus what they had spent. So we hold 100% of the asset now, and our objective over the coming years is to continue to advance this towards full feasibility and obtaining permits to operate. The project sits here, as I noted, the Dakar project here in central BC. This is the west coast of Canada, and this is the Pacific Ocean here. The project is ideally located close to very cheap hydroelectric power. What we foresee would be about 5 cents per kilowatt hour over the life of the mine, and within 5 kilometers from a railhead. And we think very proximal then to ship product ultimately to nickel consumers in Asia. And as you can see, there are several sort of operating mines within the region. This is the home of a lot of big bulk tonnage open pit mines in BC, and that's certainly what we foresee for this project as well. This gives an overview of the scale of the land package. There are 245 square kilometers in the claims package. The main deposit, as I noted earlier, is called Baptiste here at the southern end of the image, and most of the work that we and ourselves and our former partner Cliffs to date have done is on Baptiste. To show you a bit of the landscape here, the closest mine to us is about 80 kilometers away. This is the Mount Milligan mine, a large-scale copper-gold mine that went into production about 5 years ago. And you can see here the rail line, which is within 5 kilometers of our claims package. Honing in now on the main Baptiste deposit. You see the deposit is located about here. The circle that I've drawn there is about 2.2 square kilometers. This is a deposit that outcrops, or bedrock outcrops, really across the entire deposit. The strip ratio over the life of mine is very low. It's 0.17 to 1, so very little in the way of waste rock. The trails that you see here, these are all logging roads. This is an area with a lot of logging activity, which allows us excellent access to site. We don't need to use helicopters. And as we move this project forward ultimately into production, we're certainly not disturbing pristine wilderness here. The ore body itself, I'll show you here. This tool allows us to give a bit of a visual interpretation of what the ore body looks like. So what you're looking at here is about just under 2.5 billion tons of ore. This is a very, very large-scale deposit, similar in scale to the large porphyry copper mines that are also operational in this part of BC. And as you can see, the mineralization is present very much at surface, lending it that low strip ratio. In terms of resource confidence, that's indicated by the coloration here. 85% of the current resource sits in the indicated category, only 15% in inferred, so it's already quite a high confidence resource estimate. The most recent of which was put out last year in February. I'll quickly highlight another exploration target that we have at the site. We call the Van target, which is located about 6 kilometers north of Baptiste within the same land package. Again, the mineralization of nickel outcrops at surface here. The area highlighted in red is in fact larger than the area at Baptiste. It's about 3 square kilometers. And the mineralization here at surface is about 15% higher grade than the mineralization at Baptiste. So Baptiste, the initial deposit, will support 35 years plus of mining, and we think we've got the opportunity with Van and some of the other targets to add potentially decades onto that. So certainly we think of this as being sort of a regional or a district scale play on nickel. In terms of geology, the nickel here is present in a rather unique form. This is neither a sulfide nor a laterite deposit. The nickel mineralization is called awaroite. Awaroite is a nickel iron alloy. So in the image of the core here, the small reflective grains that you see, those are the grains of the mineral awaroite. Awaroite is a natural alloy of nickel and iron. The chemical formula is Ni3Fe. The main property of awaroite as a mineral is its high magnetic properties. It's far more magnetic than magnetite. And as such, there's a real ease and simplicity to metallurgical recovery of this deposit, far more akin to the recovery process used in the iron ore business, in fact, than what is typical in nickel, whether they're sulfide or laterite deposits. So this is a summary of our most recent resource estimate. You can see here, as stated in pounds, there's over 6 billion pounds of nickel contained, or around 2.5 million tons on a tons basis. The resource estimate was derived in an open pit model constrained by a nickel price of $13,000 a ton. This schematic shows the projected flow sheet based on some optimization work that we've done in recent months. We're showing here that via process of magnetic separation and flotation, that we can recover nickel into a very high-grade concentrate, typically grading between 55 and 72% at this point in testing, kind of landing generally in the range of 65%. So this would be among the highest grade nickel concentrates really ever produced. That nickel concentrate would also include a healthy amount of iron, about 25%. And so what this is ultimately is a ferronickel style product that we believe, based on our market testing of it with off-takers in China and Japan, will be a suitable feedstock as a direct feed to stainless steel production. So we'll be able to circumvent the smelting process and sell directly to stainless steel producers, and as such yield a much higher payability than typical nickel sulfide miners are able to yield. Importantly, we're also showing that in flotation we can produce an iron ore, a magnetite concentrate as a separate payable byproduct. So we would foresee producing about 1.5 million tons of this out the back end of flotation, and looking to hit the benchmark grade there of at least 62% iron content in that product. So that's something we think could add tens of millions of dollars to the project economics per annum on a byproduct basis. Just to give you a sense, this is where we think our main nickel product lands with respect to other nickel products in the marketplace. This was based on a previous market test of a lower grade concentrate that we shared with a variety of Chinese and Japanese stainless producers, who indicated to us that we could expect payables in the range of net of around 85 to 95% of the LME nickel price, again, versus typical sulfide concentrates, which yield in the range of 70 to 75% of LME. Cliffs, as I mentioned, they did a PEA in 2013 on this project. Their estimated operating costs were, on a Canadian dollar basis, about $3 a pound, which would be, on a US dollar basis, below $3 a pound, or about $6,500 a ton, today's exchange rate. I'll move on now to focus on the areas that we've been working on since taking the project back from Cliffs. Our objective has been to demonstrate that the project, in fact, is robust at a very modest nickel price assumption. We've expanded the ore body, we've improved on metallurgy, and perhaps most fundamentally, we've gotten a much better understanding of the marketability and of the likely payability for the product. All of that kind of combined means that this project, at a nickel price in the range of $15,000 a ton, will be very robust indeed, and we think ultimately will sit in the hands, in our view, of a major company who will take it into production and then have multiple decades of nickel production from a stable source in Canada. Quickly on our share price and our market capitalization, current market capitalization is 18 million dollars Canadian. Company's been public since 1996, has about 146 million shares outstanding, has never done a rollback or consolidation of stock. Current working capital is just over $1 million Canadian, and on our planned work program, that is enough to last us through to the third quarter of 2020. So no immediate plans for fundraising. And I would note there the large management ownership percentage, most of which has been accumulated here just in the last few years. Thanks very much for your time.